Hello, I'm Bart van Ark and I'm Chief Economist at the Conference Board, a think tank for the global business community. Today, I'm going to discuss together with our CEO and President Steve Odland our latest measure of CEO confidence. It is a poll of CEOs in the United States about their assessment of the economy and of their business conditions in their own industry. Steve, thank you for joining us today.
Hi, Bart. Good to be here.
Great. So let's go right into this. Of course, it's a very interesting index to discuss. Today is 9 April 2020. So we're in the middle of the COVID-19 crisis. And of course, we would expect CEOs to respond to what has been happening to us and what will happen to us in the months to come. And indeed, the results are very interesting. Let me sort of briefly take you through. We are surveying CEOs every quarter. Actually, in this quarter, we surveyed them twice. We surveyed them in late February, early March, and then we surveyed them again just about a week ago, late March, early April. And the reason we did that is, of course, because COVID-19 was declared a global pandemic by the WHO on March 11. So we really wanted to see how the sentiment has changed. We're asking CEOs basically two things. We're asking them about their assessment of the economic and business conditions currently compared to 6 months ago. And we're asking them their assessment of economic and business conditions 6 months ahead compared to what it is today. And then we roll that into one index. Now, what's interesting about this index or this measure is that if it is below 50, it just means there's more pessimism than optimism. If it's below 50, and the more it is below 50, there's of course more optimism. Interestingly, this index has been below 50 for quite a while. The last time that we actually found the index to be optimistic, more than 50, was in the third quarter of 2018. So since then, about a year and a half, this has been lower. And the reason for that mainly were the trade disputes between the United States and China, which really rattled business leaders around the world, but certainly also in the United States. Of course, we saw it picking up a little bit in late 2019 when we began to see CEOs to become slightly more optimistic. We began to have a first phase trade deal between China and the United States, but then COVID-19 hit us. And of course, we expected the index to go down. That did indeed happen. The index dropped from 43 in the fourth quarter of 2019 to 36 in late February or early March, and then to 34 in late March, early April. These are pretty low numbers, but again, compared to the global financial crisis, that's probably where we are. It becomes more interesting when you look at the underlying numbers, because it turns out that the CEOs are much more pessimistic with regard to current conditions. We see numbers going down into the single digits at this point in time, whereas they're actually a little bit more optimistic compared to a month ago when it comes to their future expectations. In other words, they're actually thinking that the economy will get better. The question, of course, is how much better. So Steve, let me ask you sort of first your assessment, and particularly sort of this difference that we're seeing here between their very negative assessment of current conditions, but then actually the hope that things will begin to improve pretty soon.
Yeah, well, I mean, if you look at these results, Bart, I mean, it's almost zero. So people are saying we're in a terrible period of time, which of course everybody knows. And business leaders are not optimistic at all about where we sit. But that's not surprising because we're sitting here in an economy that's been shut down. The government has asked everybody to stay home. It's asked all businesses to send people home. A lot of those businesses are working remotely, but so many can't. And so it's a very difficult period of time. The surprising thing to me, Bart, is how many CEOs have said that the next 6 months are going to be better. I mean, you've got optimism that's near 50, which is better than it's been in a year and a half, as you said, about the future when we're sitting at the depth of this crisis. That's amazing to me.
So it almost sounds like they believe in some kind of V-shaped recovery, right? Everything that goes down will go up very quickly. And I think the question, of course, is how steep can that V be? Because gradually the V could tilt to the side and it becomes a U. So where do you think we are in this respect?
Well, I mean, if you look at these numbers, I think that the CEOs are saying that we ought to recover very quickly. And I think that that's probably overly optimistic, because what happens in a period of time like this, having run companies myself, is you cut everything because you're trying to save money, save cash, retain employees, keep everything together so that you can emerge from this thing. But even when you emerge from this thing, you still are going to have the virus out there. People are going to be getting sick. So I don't think we're going to return to what was normal before for some time, if ever, in how we work. And I don't think demand's going to just turn back on. This was shut off like a light switch, everybody full stop, but it doesn't turn on that way. It'll be regional, it'll be by industry, by company that comes back, and that will take some period of time. So I just don't see a V-shaped possibility.
Right, and indeed, as I said, the V can gradually become a U, and then it feels really very different. Let's talk a little bit about the underlying sectors, because we do also distribute the results between sectors. Actually, we see this time, and that was a difference actually with the US-China trade conflict. We saw that industry took the biggest hit. That was, of course, because trade is mostly about goods. This crisis is really about services. Just think about all the services that are being shut down right now. So there's a lot more negativism in the services community. And there, particularly, the question is how quickly can it come back, right? Because if you're a restaurant and you can't serve the meal to your customer now, it doesn't mean you serve two meals to your customer, in 3 months' time. Whereas in industry, where you produce goods, there can be some pent-up demand, as we call it. So people will postpone their purchases and buy it later. Does that make sense?
Yeah, and that's what CEOs are saying. And you're saying industry and its manufacturing, I think with durable goods is where they're most optimistic. They're saying, people have not been able to buy those durable goods, things that are manufactured, and therefore that ought to pick back up. Now, there is some truth to that, but still, even in the case of things like automobiles or appliances that, haven't broken, and that are not operable, you could defer some of those. And so I think even those will be lost. The interesting thing will be the holidays, because it's typically during the summer when you see all of the goods from China and other Asian countries being shipped. It's all on the water, they say, by July for the holidays. That will be a very interesting thing to watch. But services, as you say, are lost. And those tend to be paid for by G&A and companies, and people cut G&A and try to save that money later.
Yeah, right. The other interesting thing about the outlook here of CEOs is we also ask them to sort of assess their sentiment by region. I mean, they're US CEOs, but most of them are large companies, so they're multinationals and they operate around the world. And what we do find in the survey is actually there's a bit more optimism with regard to the improvements in conditions in China and in Europe or even in Japan, more than in the case of the United States. And you wonder about that, right? I mean, maybe this is just a matter of timing because China's further through the COVID crisis and already seeing improvements. The US is sort of later. But on the other hand, I mean, the conditions are pretty dire everywhere.
Yeah, and I think, you've got CEOs who are human. They're sitting here in the United States for the large part, shut down, sitting with their families. People around them are getting sick. They don't know how we're going to emerge. When you hear reports that China's already recovered, you're seeing some European countries on their way back. So I think it's a little bit of the grass is greener syndrome where, it looks better elsewhere. But I think the fact of the matter is it looks pretty bleak around the world, and it's going to take some time for this to get restarted.
Yeah, let's talk a little bit about sort of the deeper insights you got from the survey, because we asked some additional questions. We asked them, of course, on sort of how heavily they thought they would be impacted by the COVID-19 crisis. 81% of them said this will have a major impact on our company. So that's a very, very high number. But then we also asked them subsequently, what do you expect on how how is your business going to be impacted by this? And let me just sort of quote you the four first most important results. 100% of them said arrange for employees to work remotely. Now, that's of course understandable. You try to get people to work from home as much as possible. 95% said curtail, cancel, or ban business travel. Then 89% said impacts profits negatively, and another 89% said impacts sales negatively. So if 89% of CEOs are saying my profits and my sales are hugely impacted by this crisis, how can you be optimistic about business conditions going forward? You're going to cut costs, your budgets are going to be hugely impacted, you will not invest later in the year. Where is that optimism coming from?
Yeah, well, I think that they're just thinking it's going to come through, as you said, in a V or a U, whatever the shape is, and things will get back to normal. But I just don't see that CEOs should be accounting for that. That would be very dangerous, in fact, for a CEO to be thinking about that. When I was running companies, you have to think about what the impact is going to be on your sales, but then you have to look at cash. And it's no different than running a household. You have to make sure that the cash coming into the house is at least as high as what's going out, because if you're spending more than you're bringing in, you're upside down. That's called burning cash. And in a company, it could be dire. What happened in the fiscal crisis is people lost their loans. They lost their ability to receive the cash. They didn't have the backstop of the banks. That seems to be a problem this time as well, where there's just not enough money out there. And at the same time, CEOs are paying their bills, they're paying their people, and we've got a situation where you're getting a little bit thin on cash here. And so what's going to happen? And it depends on how fast that V is or that U is. If it's a little longer, because maybe the virus comes back in the fall, or maybe things just don't appear, in a rapid V, then we're going to have some cash issues.
Yeah. So it's interesting. You talk so much about the cash and the liquidity point of view. I mean, a lot of the debate is currently about P&L, right? It's about what do we do with staff. And of course, from a societal point of view, that's pretty important. You know, do you lay off people or do you actually keep them on your payroll? Do you furlough them with pay or without pay and things like that? Also, from a business perspective, it's important because once the economy starts to improve, you want to have your people. If you have laid them off, who will you get back? But it seems that you say that's almost like a sort of secondary function from the first function. It is how can you stay liquid and how can you keep your cash conditions strong? Is that right?
Yeah, I think that's right. Well, and then you just have to look at the experience from before. You know, investment grade credit is triple B minus, and you know, from a rating agency perspective, but we have almost $1 trillion worth of private debt that's sitting there. And if the rating agencies say, oh, we're going to reevaluate these companies and lower their credit rating, they'll lose all access to financing, and so therefore their cash will be a problem. If that happens, then you have these bankruptcies, and there were hundreds and hundreds of bankruptcies last time. So when you hear about the government talking about, and the Fed talking about backstopping these loans and so forth, this is the most critical thing. But as a CEO, the most important thing to be doing right now is stop paying the cash out and make sure your cash in it is keeping up with your cash out. That puts a lot of pressure on bills. It ripples right through, because if you cut payments to your people and in payroll, they don't have money to pay their rents. They're upside down on the rents. And then you've got evictions. Mortgages don't get paid. All of that tends to cascade. So this is the most important, least common denominator is cash.
But then also as an economist, I wonder about this, right? Because I hear CEOs and CFOs saying this and say, you know, we need to make sure that we keep our cash position under control. Let's delay, paying our bills and things like that. And they all know it of each other that are doing that. So as an economist, I think that's a little bit of a negative equilibrium, right? If we all stop paying each other, aren't we even grinding the economy more to a halt? And how can we break through it so that we keep things going?
That's exactly right. And so this is why the backstop of the Fed, which was faster and bigger than we saw last time. This is why it's so important. The Fed took some really great steps here. But the problem is, in the end, and this CARES Act, of course, which is making these loans to small businesses and grants to companies, these are all really important things, because if you could look, we almost had full employment here, or virtual full employment 3 weeks ago. If we could keep everybody on those payrolls so that when we can go back to work, when the government says, okay, everybody, it's okay to go back in the water, well, all those people are in place, ready to go. That's the difference between this time and last time, where people lost their jobs, they left, and you allow it to settle. We cannot allow that to happen again, to allow the economy to settle and get people. We've got to keep them in their seats, ready to go, which means you've got to provide companies cash, not individuals. I'm sorry to say that. It's not to the payments to the individuals, it's payments to the companies, so that we can keep the jobs intact, so that then we can get right back up and get going again.
So let's talk a little bit, now that we're sort of talking sort of in the last part of this webcast, about what is going to be the way out of this. So one part of this is policy. So we have the CARES Act, $2.3 trillion. It is a kind of a relief act, right? It's basically trying to sort of give a floor to prevent us from falling off the cliff. You're talking about small business loans, but we're also talking about, trying to get individuals through this crisis, particularly low-income households who live from one paycheck to the next and may not be able to pay their bills if they just don't get this kind of relief. But the next question then, of course, is the stimulus part. The question is, how do we get the economy going again? So there's now discussion about the Stimulus Act. And my question to you is, what should that Stimulus Act look like? And how would businesses be helped to get things going through government stimulus?
Well, the Stimulus Act is being put together. It's phase 4, as they call it, in order to take care of state and local governments, because the tax day is April 15th, a week from now, and now they're not going to delay it by 90 days, which means the states are not going to collect their money from a state tax standpoint, so they're going to be upside down and so forth. So I think the stimulus part of it will be pumping money into the state governments and the local governments. But look, the best stimulus we could have is to turn this thing back on. That's a problem, because we're not finished with this. We're sitting here almost today at the absolute peak. And people are dying. This is really incredibly difficult. And you can't say, well, okay, let's go back, because what price do you put on death? So let's turn the economy back on. It doesn't matter that we're having thousands of people dying per day, and it will add the risk. So these are the political and the ethical questions that need to come together. We're also doing this in the middle of an election, which is a terrible period of time to do this, because everybody just wants to score points with each other. This is where the business community needs to stand up and support the politicians and say, let's do this in a metered way. Let's do it regionally. Let's do it by business. Let's do it in a thoughtful manner that doesn't put our people at risk, but we have to get things going again. That's the best stimulus that we all have.
Yeah, I mean, obviously we shouldn't just rely on government here. I think that's the other thing. It's really kind of the business role itself about how do we start up this sort of 6-foot economy that we're going to get into, right? If you want to believe in a good recovery, it's only going to be a recovery that continues social distancing in a way that we can actually get business going again, but also act responsibly so that we're not sort of getting into a W kind of shape scenario that we see a V and then we turn down again because we get more cases during the summer or perhaps during the fall. So what is it that you think companies should really do in order to make sure that we have a responsible way of starting up the economy again?
Well, I think the government and businesses need to link arms and say, we're going to do this together. We're not going to criticize each other. We're going to, we're going to cover each other. We've got each other's back, and we're going to do this in a metered way. But look, 75% of the economy, GDP, is driven by the private sector, by businesses. So no amount of government spending can make up for that. By the way, all the government spending comes from tax money from the private sector. So it's really all the private sector. So we can't rely on government. We have to rely on the private sector, but we have to, we have to do this in concert with each other as we go forward. We've got to take care of maybe everybody needs to have the option to work remotely. Maybe everybody needs to wear a mask. I don't know what it is, but we've got to protect people. Then from a public policy standpoint, the only way to do that is to make sure that they have immunity in the population. And so that we need to advance the testing, not for the virus itself, but for the immunity. And this is what they're racing to do, because we're going to need a lot of that testing in order to give us hope or a confidence that we can go forward.
So what I hear you say, and very much in line with the mission at the Conference Board, is a call for collaboration. Businesses need to work together. Businesses need to work together with government at local level, but also at federal level. And government layers need to work with each other. How hopeful are you that we're able to really realize that we're in this together and we can collaborate to get out of this?
Well, look, in the middle of an election, where people just want to fight and score points off of this thing, if you leave it to the government alone, it isn't going to happen, period. It requires business leaders. It requires, this doesn't mean, just the biggest businesses. This means small businesses, Main Street businesses, up and down the street, working with your local politicians. Everybody's got to say, look, let's be adults about this thing. Let's be calm. Let's be non-political. Let's decide what the decision rules are that we're going to follow, and then let's not criticize each other because there are ramifications, and we don't know. We've never been in this situation before, so there's no book to read and say, here's how you do it.
Quite a task ahead of us in order to sort of make true that this optimism that CEOs are having in today's release of the CEO confidence measure by the Conference Board, whether have actually a fairly optimistic outlook for out is quite a task ahead of us to make it happen. Steve Butland, President and CEO of the Conference Board, thank you for joining us on this. For more content on the COVID-19 crisis and everything else business related, please go to our website, conferenceboard.org. You can also click on the link to our COVID-19 hub, where you get all sorts of content related to various aspects of the COVID-19 crisis from a business perspective. Thank you for joining us. My name is Bart van Aert, Chief Economist at the Conference Board.